Alright guys, here we go again with another of our Evolution Consulting market updates as they've come to be known. This one being recorded on the 5th of August, 2016 during trading hours. Alright, it's about noon. And before we get into the whole point of this market update, a couple announcements we're going to make real quick, of which one is, brace yourselves, I know. As of the 13th, if you've been paying attention on Twitter, you may have seen the graphic. We haven't put anything up on the website yet, but we'll probably do that today or tomorrow. You will notice that Evolution Consulting now accepts Bitcoin. Are they serious? Yes. Okay, after, 2 or 3 years now, people asking us constantly about Bitcoin, and so many times so that during our test of concept phase, we actually kind of joked around and said we're going to start a drinking game, which is every time somebody asks us about Bitcoin, we got to do a shot of vodka, and even I couldn't handle that after a very short period of time. So we finally decided to accept Bitcoin, and there's a logic and a reason behind that. The first of which is, and I'm going to preface this by saying, or everything I'm about to say by, do not for a nanosecond, do not for a split second, don't even let the thought cross your mind, okay, that we're looking at Bitcoin like the future of money, real money, or a substitute for metals. I'm going to pause. I'm going to let that sink in for a second. Okay? We're not. Number one, we have recommended Bitcoin as a speculation to our readers. Okay, and our listeners, we've said, buy Bitcoin. It's a great way to kind of hedge the entire currency market or short the entire currency market. The more instability you get amongst fiat currencies, there is a component of society that's going to turn to Bitcoin. Okay, and that's going to drive Bitcoin prices higher. All right, so if you bought, by the way, on our recommendations, even in Wirehouse, Bitcoin up in the $600 and $700 range, relax. The whole point of that trade is it's the tulip bulbs in Amsterdam, which is, we often use that as a reference to the speculation of tulip bulbs in Amsterdam circa, again, the 1600s, where hype fueled hype and speculation fueled speculation, and you got ridiculous pricing with a crash at the end. Okay, that's how we're looking at Bitcoin. All right, because in the long run, it's going the same way Pogs and silly bands are going to go. Okay, it's a fad. That's a fact. All right. Whether the blockchain technology, I'm not talking about blockchain technology. That's a whole different story. That's a whole different update video. But in terms of Bitcoin as a currency, it's the tulip bulbs in Amsterdam. So why would we accept it? Number one, okay, hey, we want our tulip bulbs too. Okay, and number two, we will not recommend a speculation or a trade, be that a commodity, a forex trade, or any other trade for that matter, equities, that we ourselves wouldn't do, okay, with our own money. And in case you're still wondering if Evolution Ultra, or 4.0 and Ultra are the real deal, guys, we have utmost confidence in those systems, but at the same time, we're not going to recommend something that we ourselves wouldn't do, okay, and that just goes to the integrity of the business. So that being said, in terms of Bitcoin, as of the 13th, we will be accepting Bitcoin as payment. We want our tulip bulbs too, man. We'll be happy to speculate right along with you. All right, and again, we look at it the same way as we do any other speculative play. The whole point is to take something speculative, ride natural forces of economics, as it increases in valuation, sell it off and go buy metals. Because at the end of the day, guys, like it or not, and this is one of those like deal with it kind of things. All right, the new system is going to be metals backed, and for those that are operating under the absolute delusion that the new system, oh no, it's going to be Bitcoin, it's going to replace gold and silver and all that fun stuff. Okay, take a look at what China's doing and take a look at what Russia's doing. You don't hoard many metric tons of gold so that you can go use Bitcoin. You don't. Okay, it's not practical, it's not realistic, and it's not going to happen. All right, all right, if you don't listen to anything else I say, that's it. But we will be accepting Bitcoin. We'll be happy to speculate along with you, and so we'll be integrating that soon. All the graphics and everything are up. We should be up in another day or two for us to do so. And it'll be a great opportunity for us to do some research in a system that we have talked about quite frequently, which is, oddly enough, Bitcoin. So speaking of spot pricing and speaking of commodity valuations, okay, the other thing I wanted to get out of the way real quick, and I've mentioned this before, but throughout our presentation, especially on Twitter and in these market update videos, guys, I often talk about the spot price of metals. Okay, and there's a reason for that. Okay, number one is to illustrate the accuracy of the forecasting systems that we built, being able to predict a commodity price that's heavily manipulated, or was heavily manipulated up until very recently. Mention that in a second. That's number one, is just to illustrate the accuracy. Number two is spot pricing and how it pertains to various geopolitical events that are going on, the balance of power, banking ideologies, banking systems, BRICS nations, Anglo-Western systems, etc., etc. And number three is spot pricing and how it relates to a lot of our convert metal paper into more paper into metals plays. Okay, because obviously those are good. Spot price is going to have a direct effect on how those various single leverage, double leverage, and triple leverage ETFs are going to move. The whole point of what we're doing, and the whole point of converting paper into more paper into metals, is to have physically good delivered metals in the name of purchasing power for when all the fiat becomes worthless, or close enough to worthless that it's not even worth a discussion. Okay, we're talking major devaluations, be that in the U.S. dollar, the euro dollar, or any other. We are not, and please, for F's sake, listen to what I'm saying here. Do not, for a second, think that gold, physically good delivered gold, is something you buy low, be that at 1,300, 1,400, 1,500, and then when it goes up to however many thousands an ounce, okay, you sell it and turn it back into paper. That's called a fool's rally. We don't do that. We refuse to. Okay? The whole point is to have the metals on the other side of what we call the global economic reset. If you want more information on that, please do contact us, email us. We have Pi. We mention that so often. It's really one of the basis points of our investing strategy. But by no means are we encouraging buying gold and silver as a commodity to make a paper profit on. Okay, it's kind of like asking, what's the dollar worth? What's the dollar worth compared, or what's gold worth compared to the dollar? And the real question you're supposed to ask is, what's the dollar worth compared to gold? Okay, so just to make sure everybody's in the correct mindset now, we're not encouraging people to, to buy gold low and sell high. It's not a paper trade, guys. That's an insurance. And ensuring economic viability or financial viability in the event or the inevitability that there's going to be a debt-fueled currency implosion. Sometime around, basically what we're forecasting is Q3, Q4 2017 or early 2018, Q1, Q2 2018. Okay, and even if we're off by a couple of months, guess what's going to happen? It's an inevitability, and I think enough people at this point kind of see the writing on the wall that it's going to happen. So, that said, and that out of the way, we move on to our market update piece here, right? Which is, might as well talk about the obvious first, right? So May of 2016, we have the jobs report come out, non-farms, right? And they were expecting 162,000 and 38,000 get reported. Okay. June, they're expecting 175,000 and 287,000 get reported. I spend a lot of time doing this, guys. I am a study of economics. I am a study of geopolitics, but perhaps somebody out there can tell me what in the hell changed in 1 month to get that kind of swing in metrics. I got nothing. Normally this is where I have something like really clever to say or something. As a matter of fact, this is the first time we're going to be using the Black Swan WTF file, which should be up there now. What changed? 1 month. Expected 162,000, reported 38,000. Next month, expected 175,000, reported 287,000. So you mean to tell me in 30 days the economy spontaneously recovered to the point where there's a hiring spree going on? All right, guys. First of all, we got some good news. If you look at, metals down $20, gold down $20 today, silver I haven't looked at recently, but if you look at the ETFs specifically, JNUG, NUGT, and a few others, GDX or GDXJ, both of them actually, but the drop in those ETFs was not nearly as big as you would expect on a $20 down day. Okay, and that tells me something very important. That tells me that people, and probably algos as well, have figured out short attention span theater, which is, okay, so we report jobs earnings, they say, blue estimates out of the water. How long do you think that's going to last? Short attention span theater. Jobs reports now are good for 2-3 days at best. Seriously. And then it's on to the next news cycle, on to the next news catalyst. But in the meantime, what it's done is it's actually showed signs of another prediction or another forecast that we've made kind of coming to fruition, and that is the days of selling naked shorts and the days of just outright push-the-button manipulate the metals market. That's over for what's left of the Anglo-Western banking system, all right? The only way that they have left is, as we forecasted, an artificially strong dollar, which they can't go too crazy with, otherwise they'll kill GDP numbers, or run the markets up to boogie heaven, as we often call it. And we did a market update piece on that a few days ago. He said that's really the only way they have left, and if that's how they're going to do it, rub your hands together, because it's payday every day, okay? Because we're going to use the market to, even at the index level or at the sector level, convert paper into more paper into metals. And to be quite honest with you, by throwing numbers out like, a 287,000 against a 175,000 job estimate, yeah, run the S&P to 2,200. Run it to 2,500. Run it to 3,000. I don't care. And neither should, anybody trading this market. If they're going to window dress in the name of the election, okay, and kind of use it as a backhanded way to repress metals, try that one in English, repress metals, be my guest. Quadruple coupon day, guys. Use the market, use the equities, use the speculations that are out there, be that, ETFs on the commodities or specific equity recommendations that we've made, like NVIDIA, amongst others. Use that. Make all the paper you want. Have at it. And then go buy the physically good delivered metals at a discount. Like I said, if they're dumb enough to do that, we're smart enough to capitalize. All right? So as far as the jobs report, I really don't. I don't have anything clever to say to that other than what changed. And I think anybody with a functioning frontal lobe at this point is going to kind of go, huh? What? That's purely political. That's purely political, probably with the possible added bonus of a little bit of metals repressions there. But again, you can see those metals ETFs not buying it. Speaking of buying metals ETFs, guys, as usual, hopefully, by now I don't have to say it anymore. You just kind of know how the drill goes. All right, you see dips like that on those metals ETFs, you buy them, and you get the rebound plus the next upside catalyst. That's where you get those big 20, 30% per trade returns from. So that being said, guys, as far as anything else that's going on in terms of markets, it's kind of, they were saying, another thing I'd like to add is the Fed might raise rates in September now as a result of this jobs report. Stop and think for a second. They're going to run the market up to boogie heaven, and then they're going to raise rates and absolutely implode the market right before an election, and and take away the only thing anybody running on the Democratic ticket can point to is the fact that indexes and so-called economic recoveries put all the major indexes at ridiculous numbers. They're gonna run up, the market. So Hillary's got something to point to and say, see, under Obama, the S&P is at 67 million or whatever. No, they're not going to. They are not going to touch interest rates until after the election. As I've said, and I'm standing by this prediction, Janet did the one thing. She did her interest rates 0.25 basis points. She's done. Okay? She's done. Regardless if Hillary or Trump gets elected, she's done. Okay? Because it's just, at this point, there's zero confidence in her. She's history. So, that being said, we're forecasting December, guys. Seriously. If any. Okay? There's no way they're gonna screw with the market before an election like that and take away the only thing that the left can point to say, hey, economics, we didn't do that, or they didn't do that bad, I should say. With that in mind, guys, as always, hopefully you guys are enjoying these. Be good. Everything really is a transaction.